Welcome back. You're watching What's Hot on CNBC TV 18. This is a bitter pill to swallow. Ranbaxy reported a deeper than expected first quarter loss of over 760 crores. This as exports of its generic drugs fell sharply, posted loss on foreign exchange derivatives contracts as well. Shahina Mukadam now joins us, so is our research analyst Archie Damania. Archie, let me come to you first. Take us through the key highlights of the earnings of Ranbaxy.
Thanks for that. Ranbaxy actually posted very dismal set of numbers with a sales degrowth of 4%. It posted a net loss of 760 crores. Now, most of it is because of the forex loss. The forex loss has come in at 918 crores. This is on account of their forward cover contracts to forward cover positions, which are to the tune of $1.4 billion. Now, if you exclude this forex loss, the net loss stands at 26 crores. But however, the company is positive at EBITDA levels. There's no loss there. If you look at look at the results operationally, the US operations have degrown by about 34% year on year. This is mainly on account of US ban, but other markets like emerging markets and Europe has also degrown. Except India and Russia, most other markets have degrown. In fact, in Europe, the company has made a deliberate attempt to step back because of heavy price erosions over there. For calendar year 2009, the company has given guidance to clock sales of 7,000 crores and a net loss of 800 crores. Now, this net loss of 800 crores in the guidance accounts for the first quarter loss, and the remaining quarters will be break even.
Archie, many thanks for joining in. Shahina, let me begin by asking you, what is your key takeaways of what happened at Ranbaxy today? Is that figure largely because of what's happened to the forex loss?
Yes, it is, but it's a big, that is one of the factors. The other, of course, is the slowdown in sales across geographies, largely US, because US sales have really taken a hit with the FDA problems, and also Europe, because of what Archie was saying in terms of their realigning the business out there. But the biggest, of course, as you mentioned, is the forex loss. And I really don't know how they're going to sort this out, in the medium term, because this quarter loss is based on an exchange rate of 50.50. Now, if let us assume for a second that it goes up to 52, so they're going to see this huge, they have not really quantified. We really don't have a number, but huge losses even going forward. So when we are talking of a break even, for the year, this is a calendar year, so 2009 calendar year break even. This is assuming that we are not going to see too much of a problem on the forex front, which I think is it's difficult to take a call. So I think the problems are huge for this company in the shorter term. One is, of course, this. Then we've discussed the US problem. US FDA, they are in talks, and they hope that they could sort it out within 3 to 4 months. But that again is a question. And while the company is making efforts to shift, say, a transfer site production to Ohm, which is a manufacturing site they've got in US, I don't know how much they would really able to do it, and whether they can actually compensate for whatever sales they are going to lose in the next couple of months, and compensate for it in the second half. So there are a lot of questions.
All right, so dismal numbers, Shahina, as far as Ranbaxy is concerned, and even the guidance is not looking particularly optimistic. But what about the other pharma numbers? Cipla came out with numbers, wakad, Piramal Healthcare. Cipla's also had that advantage of winning that patent battle against Roche in the Delhi High Court. On balance, what's the pharma numbers looking like?
See, if you exclude Ranbaxy, or at least the street was expecting, the overall pharma numbers to grow by about 10 to 12% in terms of profitability for this quarter. Now, of course, with Ranbaxy's numbers, this whole equation, falls out of place. I think Cipla came out with very good numbers. Let me say, Cipla is the Infosys of pharma. So, I mean, it's good times, bad times, they sort of manage things well. And I think even Piramal did well, but that is more to do because they are domestically oriented. Most of the turnover comes from domestic sales, and which is doing pretty fine. Our domestic sales are growing in 9-10%, double digit, and they have managed to do that. And also CRAM's business is doing relatively okay. I wouldn't say it's doing great, because there's a lot of global, companies on the global level which are actually destocking. They're not really adding on to the stock level, which is what is affecting even CRAM's companies to an extent. So we're not really looking at too great a quarter for most of the companies. And I think the forex problem that was there for Ranbaxy, it's there for across the board. We are expecting that problem to be for Biocon. Even Cipla has that problem. I mean, in the quarter they just did a small loss on forex, but for the year they've had a huge loss in forex. So I think we are seeing forex loss problem across the board for the pharma sector.
Well, I can't but ask you about what you think about the flux that's going on with wakad, and what's your assessment of it?
I think wakad is genuinely facing problems of cash flow, and I think the balance sheet was too over-leveraged, and I think they are going to have some problems, trying to clean up the balance sheet. But I think the core business is doing okay. But at the same time, unless the balance sheet is cleaned up, which is the big issue, investors will stay cautious on the company. I think there are opportunities for them to, divest or sort of get a partner for some of their hospital business and try to, improve their balance sheet. But it should take little time.
Shahina, going back to Ranbaxy, because you've just attended the conference call that the company had, what was the sense that you actually got from the management? Because they continue to speak about inorganic opportunities that they're scouting for, but any other positive highlights from that management call?
Not really. I mean, I didn't really sort of get any too much of a positive highlight. There were a couple of positives that they are expecting that on the EBITDA level they wouldn't do worse in the remaining quarters. That's what they have done now, and also they have sort of given a guidance which is pretty decent, break even. The fact is whether the market will believe it, because based on the forex, the rate at which, I mean, if the forex were, if you're going to have the rupee depreciate further, then you could have further problem. So whether the street will go with the numbers, and any which ways on a PE basis, there's no profit. So really speaking, it's just a question of what you expect the Daiichi management to do. And let us assume the whole market is talking of something over and above the numbers or beyond the numbers. So I think that is going to keep the stock price buzzing. And I would be very cautious selling this stock, because yes, that is a fact. And with a large player which is looking at long term, looking at Japan and other markets as a new market, I would still, just stay invested, knowing that nothing is going to happen.
All right, so it's a hold as far as you're concerned on Ranbaxy. Many thanks.